You've probably heard this. Once your profit hits 100K, you should consider becoming an S-Corp. Well, I've seen situations where people's profit has been to 100K, but it didn't make sense for them to be an S-Corp. And I've seen people whose profit hasn't hit 100K, but having an S-Corp actually does make sense for them. So today in this video, I'm going to walk you through how a California business owner should think about becoming an S-Corp or not in a simple way. Hi, my name is Karen Yu. I'm a CPA. I run a small tax planning firm here in Los Angeles. Since 2018, we've helped over 200 clients save 10 million plus in taxes through proactive tax planning. Now, let's talk about S-Corp. People always talk about having an S-Corp, you'll save money in taxes. What are they really talking about? The simple way to think about this is, as an S-Corp, there are two ways for you to take money out of the business. First is as the employee of the S-Corp. You pay yourself a W-2, where you pay your payroll taxes. The other way you pay yourself is as the owner of an S-Corp. You get your profit sharing or distribution, where you do not pay the payroll taxes, which is 15.3% self-employment tax. So when people talk about S-Corp tax savings, most of the time, they're talking about the self-employment tax. Every dollar that doesn't have to be treated as your payroll or your employee wages, you save 15 cents. For us, the self-employment tax savings are only part of the story. Sometimes setting up the S-Corp and a reasonable salary opens the door for other planning opportunities that may have much bigger tax saving later on. We'll save that for another video. Now, let's focus on whether the S-Corp is worth putting on the table. So really quick, if you're doing one project or you are looking for jobs between jobs, I would not consider an S-Corp. Just focus on what you are currently doing and then think about the S-Corp when you really want this to become your business. So everything below is for people who are actually running and trying to grow their business. If hitting 100K in profit is not the right signal, what is? This is how we think about reasonable salary with our clients. If I hire someone else to do my job, what would I have to pay them? To do this, you think about how many hours you spend doing admin, how many hours you spend doing sales and then marketing, how many hours you're actually doing your work, like let's say your attorney hours or professional services. Or sometimes you have a manager that's doing your work. Did that manager take you out of the business? So to put all of this together, you might say, hey, to do the work I'm actually doing right now, I'll pay someone $40,000, or this is really a $250K job. Okay, that number is your starting point for reasonable salary. In real life, you do need documents to support it. Your hours, your role, what the market will pay. So here's the key idea. Your profit does not determine your salary. Your work does. This one calculation opens the door for a lot of planning opportunities later. But for now, let's keep it simple. What would I pay someone to do what I do? Okay, let's put this into practice. Example number one. Let's say your profit is 180K and your rough salary, 100K. The difference is 8. So 15% of the 80K is 12,000. Example number two. Your profit is 90K. And what are you actually doing roughly? 20K in salary. The difference is 70K. 15% of 70K is 10,500. So as you can see, it's not about the profit 100K. It's how much your business is making and how much you pay someone else to do the work you do, how big that gap is. If the 15% number is 10K or more, you should seriously think about S-Corp. If that number is much smaller, an S-Corp may not worth the extra complexity. I'll add another nuance. I've seen an S-Corp only saves 5K in self-employment tax, but it unlocks a completely different strategy that saves client much more money later on. So that's why hitting 100K in profit, you should become an S-Corp. It's a cookie cutter starting point of tax planning. If you take your role, your hours, and downstream planning into consideration, S-Corp could be a much bigger strategy than what you're thinking, or sometimes it does not worth it at all. Payroll penalties and timing are very strict. Those are not fun to fix. If you do decide to go with an S-Corp route, don't do payroll yourself. Hire a payroll company so you're not trying to create problems while saving tax. Let's put it all together. Is this your real business going forward? If this is just a one-time project or you're in between work, keep it simple. Focus on what you're doing. Number two, if you hire someone to do your job, how much would you pay them? So use your profit minus that salary, and then the difference times 15%. I mean, if that's more than 10K, you can seriously consider about the S-Corp. Remember, choosing an S-Corp is just a beginning. Once we understand your business, your role, and where you want to go, these actually fits you. Sometimes those opportunities are much bigger than the self-employment tax people are focusing on. If you're a California business owners and attorneys, and you've been told once you hit 100K, you should think about S-Corp, I hope this video gives you a better way to think about it.